Everyone wants to be successful. The best way to do this is to work for yourself. Be your own boss. One way to be your own boss is to start your own business. Owning your own business has many benefits, such as work schedule flexibility, financial independence, and building your own brand, to name a few. Start your own business and selecting a business structure might appear overwhelming, but it doesn't have to be. Welcome to Golden State Consulting. At Golden State Consulting, we know how important it is for entrepreneurs like you to choose the appropriate structures for your business. We're here to give you the knowledge and tools you'll need to help sort through the major structures used today. Whether you're thinking about starting your own business, already have one, or have no idea and just want to learn, you will be equipped to take the next step. Today, we'll talk you through becoming a successful small business owner by reviewing the different business structures, listening to small business owners' testimonials, introducing you to a questionnaire that will help identify which business structure is best for you, and examining how other business owners have structured their businesses for the last 30 years. Additionally, all of the information in today's presentation is also available on our website at www.goldenstateconsulting.wordpress.com. So, what are the 5 business structures? They are sole proprietorship, partnership, limited liability company, S corporation, and C corporation. To give you an idea, here are a few examples of each of those structures. At a high level, a partnership is a formal arrangement by 2 or more parties to manage and operate a business and share its profits. And a C corporation is a legal structure for a corporation in which the owners are taxed separately from the entity. Now, let's dive deep at the 3 most utilized business structures: sole proprietorship, limited liability company, and S corporation. I'll turn it over to Anthony, who will begin with sole proprietorship.
Key features of a sole proprietorship business structure. The primary defining factor of a sole proprietorship is that you are your business. What does this mean? In terms of legal status, this simply means that you and your business are the same legal entity. Any liability, lawsuit, and all debts solely fall on you, the business owner. The primary advantage of this all-in-one status is it is simple and very cost-effective. Disadvantages include complete liability and any legal action taken involving your business. A key feature in your new sole proprietorship is the savings you will receive in the way your business is taxed compared to a corporation. A sole proprietorship is someone who owns an unincorporated business by himself or herself. Income from your business will be filed along with a standard U.S. individual income tax return, Form 1040. If you expect to owe $1,000 or more when you file your tax return at the end of the year, you are required to make quarterly estimated tax payments. Your income tax rate on all your business income is calculated the same as any other person. Included in this is a 15% self-employment tax, which covers Social Security and Medicare. If you have or are planning to hire employees, you are required to file with the IRS and receive an employer identification number. There are additional tax considerations when you have employees, such as withholdings and additional tax forms. For more information, see our handouts, as well as convenient links and checklists on our website. In order to determine how much you owe in taxes, you'll need to keep records of your business income. As a sole proprietorship, you're allowed to use any accounting method that accurately reflects income. This can be the cash accounting method or the accrual method of accounting. As the owner of a sole proprietorship, you have complete rights to everything that is your business. You get to make all management decisions and how your business income is used, how much you pay yourself, how much you use for expenses and debt, and how much you reinvest in business capital. This is a huge advantage over a partnership or corporation where you are potentially dependent on others in determining how much money goes, where your money goes, and how you get paid. Regardless of how much you pay yourself out of the profits from your business, it is all taxed the same. All business income is taxed at an individual income rate as previously discussed. An additional consideration when determining the best business structure for you as your future plans for your business. If you ever decide to sell your business, you must sell a business in its entirety. The same goes for making changes in the business structure. The business must be completely restructured legally. For example, if you decide to add a business partner, it is not as simple as signing on an additional person. You must completely restructure your sole proprietorship from the ground up as a new business structure. New IRS, state, county forms are required. This is a small disadvantage when compared to corporations, which are more flexible in terms of ownership. Although not required, if you use a business name other than your own name, most states require you to file a doing business as form. This is also known as a trade name, fictitious name, or assumed name. This doesn't provide legal protection, such as a trademark, but having a doing business as name and filing an EIN with the IRS allows you to open a business bank account. For more information, advantages, disadvantages, and personal experience, Lizette has been kind enough to discuss her sole proprietorship with us.
My name is Lizette, and I am the owner of Mystic Turtle Photography. My love for photography started out as a hobby. Over the years, I progressed to taking pictures at family weddings and birthday parties. I started getting paid, and through word of mouth, I began to book a gig here and there. You know, one of the primary reasons why people elect me as their photographer is because I listen. When I meet with clients, I practice active listening, which means listening to understand their point of view without evaluating or judging them. I understand that each person has a different view of the world, and therefore everyone wants something different. Because I listen, I'm able to capture their special moments the way they envision them. So before I knew it, I had quit my job and ventured into business ownership. Actually, I was surprised to learn that I was already considered a business, a sole proprietorship to be exact. I thought to myself, how can I be a business? I'm just one person. But it's true. I was conducting business under my name. Soon after, I decided to make my business official by establishing a trade name. I was afraid this would add complications, so I did a little research. That's when I discovered how easy it all was. I submitted a form called Doing Business As, or DBA. I paid a few state and county fees. A couple weeks later, I received my certificate in the mail. I used it to open a new bank account and a credit card. I will tell you though, a couple colleagues did warn me about being held personally liable for debt or even lawsuits. My personal assets, including my home, could be taken away. Although true, I didn't let that scare me too much. I have one confession. I did run into a small roadblock. About a year ago, I was trying to raise money to buy new equipment. And because I'm a sole proprietor, the banks were really hesitant to lend money. I also couldn't sell stocks. So ultimately, I resorted to family. What's family for, right? But in all honesty, if you anticipate the need to raise capital, perhaps sole proprietorship isn't for you. Filing taxes, on the other hand, is pretty simple and straightforward. All income generated from Mystic Turtle Photography is reported on my personal tax form, so there's no need to file a separate business tax return. Also, any expenses related to the cost of doing business are fully deductible from income tax. That means I can expense traveling to your next event where I'll be capturing your precious moments.
Next, let's talk about LLCs. So in this section, we're going to cover 4 major areas. First is your legal status. Second is taxes. Third, ownership rights and transferability of ownership. And fourth is how you get paid. So let's start with the legal status. LLCs are recognized as a separate entity from the owner, limiting liability between you and your personal belongings and those of the business. So with an LLC, there's no requirement for special meetings, keeping extensive corporate records, or many other formalities that the other business structures go through. Limited liability companies are even more flexible when it comes to taxes, offering lots of options so you can create a tax plan that works for you. One of the primary advantages of an LLC is that its owners, called members, have limited liability, meaning that under most circumstances, they're not personally liable for the debts and liabilities of the LLC. The simplicity, protection, and ease of use have made forming an LLC a popular choice of small businesses in America. Next up, let's talk about taxes. So taxation can be complicated when it comes to LLCs. Today, we'll keep it simple, and there will be reference material we'll direct you to at the end of the presentation if you'd like to go deeper. But today, let's get into just the basics. So in an LLC, you basically have a choice between a sole proprietorship taxation or partnership taxation if there's more than one member in your LLC, and then corporate taxation. So the difference between the two types is the sole proprietorships and partnerships are not taxed at all, while corporations are treated like separate taxpayers. So a sole proprietorship or partnership just reports its income and expenses, whereas the proprietor and partners report the net profit or loss of their personal tax returns. A corporation files a tax return and pays tax on any profits. If it distributes any of the profits to the members, those profits are taxed again, so that's called double taxation. And there are a few ways to get around double taxation, which again can be found in the reference material at the end of the presentation. Next, let's get into ownership rights and transferability of ownership. So under ownership rights, it varies by state, so each state has different regulations. Most states do not restrict ownership, so members, owners of an LLC, may include individuals, corporations, other LLCs, and foreign entities. There is no maximum number of members. So most states permit single-member LLCs, those having one owner. In any case, the ownership rights are divided among the members, divided up into membership interest by percentage, and does not necessarily have to be done equally. As far as the transferability of ownership, so you would need to have completed an operating agreement for your LLC. It's probably done before you even form the LLC, but this operating agreement is a contract among the LLC members that specifies the way the LLC will operate. It may contain a buy-sell or buyout provision, which will govern the way you transfer ownership. So the LLC may have a separate buy-sell agreement. If you do not have a buy-sell agreement, you'll have to check with your state statutes for guidance on how to transfer membership interests. You may need to complete a separate written agreement to transfer ownership. Some states even require you to completely dissolve the company if your operating agreement does not have an ownership transfer section. Lastly, how do you get paid? So there are 4 ways to explore here. So first is you could pay yourself wages or a salary from your single member LLC or other LLC, but you must actively be working in the business. If there are multiple members or owners in the LLC, you have to choose one way for all. So you can't pay yourself a salary without setting up salaries for the rest of the members or owners. Second is you can choose to receive distributions from the LLC profits. So based on your interest percentage, you set forth in the operating agreement that you did ahead of time, you would split profits in that manner. So the risk here is that your take home is based on the success of the business, whereas in the former, you would just have a steady income. So the third is you could hire yourself as an independent contractor for your own LLC. So this is interesting. So let's just say your LLC makes jewelry and you hire yourself on to create jewelry. You'd be an independent contractor, but would still be held accountable for paying self-employment taxes on the amount you've earned and file a W-9 form with the IRS under the LLC. And then you as the owner of the LLC will file a 1099 form with the IRS. And then lastly, you could choose not to receive payments. So you also have the option to not pay yourself anything and leave the profits in the LLC. So you still will need to pay income tax on the profit earned since the profits from your LLC pass through to your personal tax return. So you can't run from taxes, but at least an LLC will let you choose a method that best suits the business. Next up, we'll hear from a small business owner who chose LLC to structure his business.
Hi, I am Anthony Peters. My limited liability corporation is Palm Springs Professionals. We are a general contractor specializing in the repair, remodel, and renovation of single-family homes. From curbside eye appeal to sewage drains, we are certified and equipped to work on every inch of your house. Working on and around clients' property and homes does not always come without risk. I chose to create my business as an LLC in order to protect myself, my family, and my employees from lawsuits. Sometimes things happen, such as on-the-job injuries and lawsuits from incidental damages. Of course, we follow OSHA and state safety regulations, but sometimes things happen. And beyond insurance, operating as an LLC gives me additional peace of mind. Since I'm the sole owner of my LLC, I manage my business as if it were a sole proprietorship. I make all decisions on employee management, investments, insurance, funding, debts, risk, etc. I have also filed the appropriate paperwork for flow-through taxes, or to be considered a disregarded entity. I save a lot of money on taxes this way. After I earned my general contractor's license, starting my business as a legal entity was a little detailed, but not hard. Once I decided on my business structure, I knew there were several steps to legally register the business. I filed an article of organization and a statement of information with the state of California to file as an LLC. I then registered for an EIN with the IRS for federal taxes and again with the state of California for state taxes. Once I received my EIN, I opened a checking account, a line of credit, and I received a small business loan to begin financing my business. As a small business, this is the best way for me to raise capital. I presented a business plan and my qualifications, and I qualified for a small business loan. After that, I started working, fulfilling contracts, renovating and repairing houses. I currently have one employee, a longtime friend who might want to go into business with me. Another benefit of filing as an LLC, the business can have multiple owners, and I can change and adjust my business as required. Of course, there is a bit more paperwork to file and additional tax considerations, but it is adjustable. Well, thank you for listening. I'm going back to work.
The next business structure we'll be discussing today is S corporation. At a high level, a corporation is a legal entity. It is separate and distinct from its owners. A subchapter S, or S Corp, is a special form of corporation that meets specific IRS code requirements. To be eligible, a subchapter S corporation, it must 1. Have 100 or less shareholders. 2. Shareholders must be individuals. 3. Shareholders must be U.S. citizens or residents. And 4. There should only be one class of stock. One reason why an S Corp is attractive is because it offers their owners limited liability protection. The owners are not responsible for business debt and liabilities. Another major reason why a business owner would decide to structure his or her business as an S Corp has to do with tax advantages. S corporations do not pay income taxes. Instead, what happens is the corporation's profit and losses are divided among and passed through to its shareholders. The shareholders must then report the profit and loss on their own individual income tax returns. As a result, there's just one level of federal tax to pay. The S corporation status lets businesses avoid double taxation, which is what happens when a business is taxed at both the corporate and individual level. The IRS requires S Corps to file two forms, Form 1120S and Schedule K-1. Form 1120S is simply the corporation's tax return. Form 1120S is part of the Schedule K-1 document. The form identifies the percentage of company shares owned by each individual shareholder for the tax year and must be prepared for all individuals. As is the case for any other corporation, the FICA tax is imposed only with respect to employee wages and not on distributive shares of shareholders. Each state treats S corporations differently. Some states disregard S Chapter S status entirely, offering no tax breaks at all. Other states, such as California, honor the federal election automatically. Finally, some states require a filing of a state-specific form to complete Subchapter S election. In California, S corporations pay a franchise tax of 1.5 of net income. This is one factor to be taken into consideration when choosing between a limited liability company and an S Corp in California. S corporations can maintain their accounting records on a cash basis or an accrual basis. Using accrual accounting, the business recognizes revenues and expenses as they occur, regardless of whether or not cash is exchanged. Under the cash accounting method, the business only records a transaction when cash flows in and out of the business. Some exceptions apply. First, the S Corp must be an eligible business type. Second, there are gross receipt limitations. And lastly, there are inventory restrictions. Ownership of a corporation is represented by shares of stock, which are the holder's private property. One of the benefits of an S-corp is the built-in ownership transfer structure. Stock is freely transferable. This means shareholders are able to sell their interest without obtaining approval from other shareholders. Because an S-corp is privately held, shares cannot be bought and sold on open markets. The parties to transfer shares agree to terms privately and memorialize the agreement as a written contract. Like all other business structures, S-corp has its shares of pros and cons. I've arranged for Jeff, an S-corp business owner, to share his experiences with you.
Hi there, my name is Jeff, and I'm the founder and CEO of Club Universal, an upscale gym here in San Francisco. I wanted to tell you why I chose S-corp as our business structure. It really came down to a few things I saw this venture needing, like a board of directors. I wanted advisors to help guide me and help identify inefficiencies in my business where I couldn't. I didn't have a ton of cash and didn't want to get hit so hard with bank loans, so I knew I had to sell stock to help finance the business. A friend of mine in the gym management business told me the best method for accounting is accrual accounting, since we need to account for gym members who pay up front for the year's membership. We want to realize those revenues each month that we're servicing the customer and not just in January or whenever the contract starts. So I'd love to get the option to choose which method of accounting to use with S-corp. We also get to avoid double taxation because the shareholders are reporting profit and losses on their own tax returns, so more money for us in the business. I really only see these gyms maybe expanding in the Bay Area, but nothing I can't manage myself, so I don't have the need to raise any more capital to start the next couple gyms. With all this early success, I keep in mind that this can lead to failure if I'm not careful. Another fellow gym owner gave me the advice a few years back. She said, doing more of the same things you've done in the past, only better and faster, will not necessarily help you get to where you want to go in the future. Rather, you need to be able to anticipate, develop, and use new skills that will help you survive, even thrive, especially if the environment or your job responsibilities differ in significant ways from the past. So overall, I'm happy with the S-corp business structure, and I think you will be too.
Now that you have learned about each of the major business structures, Golden State Consulting invites you to take a short questionnaire. When taking this questionnaire, imagine yourself the entrepreneur. Imagine what type of business you would create. How would you be successful? How would you be your own boss? The questionnaire is short, yet provides insight into what type of business structure might work for you. When this video stops in just a moment, please click the back arrow on the bottom left of your screen and follow the link provided to the questionnaire. When complete, there will be a link to return you to this presentation. Enjoy.